Hello traders and welcome to another video review. Today is Thursday, July 27th, 2023. Let's find out what's going on in the Forex economic calendar today. The key information that will be passed from the ECB today, the key thing that will take place today is the ECB interest rate decision. Of course, this kind of a data release will most likely increase the volatility all over the markets. ECB interest rate decision is scheduled for release at 15 minutes past 2, together with the deposit facility rate. The ECB press conference is scheduled 30 minutes later, quarter to 3 p.m. The market participants expect the ECB to hike the interest rate from 4% to 4.25% and the deposit facility rate from 3.50 to 3.75%. 15 minutes later, we got data from the US, and this is the core durable goods orders and the GDP and initial jobless claims. All of them are scheduled for release 4:30, and as you can see, the GDP for the second quarter is expected to drop from 2% to 1.8%. At 4 o'clock, we have the scheduled pending home sales data from the US, and this is the last very important event scheduled for today. So, very busy day. Day full of plenty of the important data releases. So stay vigilant, guys, stay vigilant, and let's take a look at the technical part. We are going to start with the euro dollar because this pair will be the mostly affected by the news releases today. For our chart of the euro dollar is showing us as some sort of the bounce. Okay, this bounce has started from the level of 1.1022. So this is the low from the made 2 days ago, and we are now trading higher, right? We got this short-term trend line. We can change the color, of course, to the orange to avoid any confusion. So we got this short-term trend line. Yeah, let's leave it like that, and we hit the 50 periods moving average around 1.1110, and as you can see, we got some sort of the pin bearish candle made on the 4-hour chart. It looks like the bears are defending these levels already. The next very important technical resistance is located at 1.1119. So that's the resistance you have on the screen right now, and please be informed that this level is very, very close to one of the key Fibonacci retracement. If we take a look at the Fibonacci's, you will see that from, let's say, from this low, and if we consider this high, we traced roughly, well, something between 50 and 61% of the last wave up. So 61% is still present on the chart at the level of 1.1002. So this black line is now 61% of the Fibonacci retracement. So we are going higher. We are bouncing from the extremely oversold market conditions towards the level of 50. If you can see it, let me just put the level of 50 on the chart, something like this. Yes, it's almost perfect. And this level of 50 is, of course, the neutral level. So right now, just below this 50 periods moving average, after a few days, a few hours basically of correction or a pullback, we hit the neutral market conditions, and now the market will position itself for the ECB interest rate decision. So please stay vigilant. We might go lower or we might go higher, but it depends on the market reaction on the actual ECB decision. If the ECB hikes, then of course the market will be more likely to buy euro. If the ECB hikes more than expected, we should see very nice increase in the ECB. We should see a spike higher. on the euro dollar chart towards the swing high at 1.1276. However, if the market if the ECB will behave as expected, or if the ECB will hike as expected, we should see some kind of a end of the consolidation, end of the pullback, end of the market positioning, and possible breakout lower, first towards 61% of the Fibonacci retracement, and then towards the swing low. So that's the outlook for the euro. Please stay vigilant, because the ECB interest rate decision is coming your way. What other pairs will be affected by the ECB interest rate decision? We can take a look at the euro to the Japanese yen. And the situation on the euro to the Japanese yen is slightly different, because we have made we have made very important level. We tested this very important level plenty of times. 158 roughly is the level, 157.94. Okay, just recently we hit it as well, and the market, of course, was rejected from this level. We broke, look at this, we broke below this short-term trend line. Look at that breakout, very nice breakout, and now we are below short-term trend line, below 50 and 100 periods moving average. We just tested the local low, 154.82. You can see it here. We bounced a little bit, but it looks like there is still some kind of a room on the momentum indicator on the RSI, and there is still a room on the chart as well. So we should expect this market to go basically lower. The next important technical support is located at 153.41. So right now this level will be very, very attractive for bears. Okay, so let me just zoom in for you guys to see a little bit better. The outlook remains bearish. The outlook remains bearish in the short term, mostly because this level of 158, let's say, had been rejected so many times. All right, so maybe today the ECB interest rate decision will trigger some more violent moves on the euro to the Japanese yen. All right, so please stay vigilant as well. Any other euro related pairs? Let's take a look at the euro to the British pound for our chart. And what do we have here? Okay, nothing interesting that much here. Nevertheless, we got pretty decent reversal here. So what we have is like some sort of the trend line. Again, these trend lines will hunt you guys for most of the time, because the short-term trend lines are very, very good the technical analysis tool. So what do we have here is, of course, the technical resistance located at 8,700 pips. Now rejected from the highs, no pullback to the upside resulted in a rally. We have Marubozu, we have plenty of the indication of some sort of the pin bar candles, and we are heading towards, of course, this local swing low, 8,503 pips. We are below 50 and 100 periods moving average. We are below the short-term trend line. The local technical support is maybe located at 8,534, but that's not very strong technical support, and the resistance, intraday technical resistance, is 8,585. Market conditions are extremely oversold right now. Okay, so any kind of a bounce from this technical support level is welcome. However, we might extend towards the swing low because of the ECB interest rate decision. So that's another very interesting euro related pair that needs to be watched closely within the next few hours. So if the volatility will increase, the market participants will not be that much surprised. So thank you very much for watching this analysis, euro related, due to the ECB interest rate decision later on today, and I hope I will see you guys tomorrow for another analysis. So thank you very much. See you guys next time. Take care and Bye bye.